Hi guys, Florian here. Today we'll have a look at the Norwegian food sorting and recycling machine manufacturer, Tomra. We will look at how Tomra makes their money, how they can turn trash to cash. We will see in which markets Tomra is operating, and we'll have a look at the financials of Tomra and see if they might be a good investment for us or not. So the ticker symbol of Tomra is TOM on the Oslo Stock Exchange. And if you want to buy them in the US or in any other country, you can search for the ticker symbol TMRAF on the OTC. The sector they are operating in is the industrial sector. They were founded in 1972 and have around 5,000 employees, and the headquarters is located in Asker, Norway. The market cap sets around $2.03 billion at the moment. So the first segment that Tomra is operating in is the collection and reverse vending machine segment. Here you can see, for example, this woman is putting a huge bag of plastic bottles and aluminum cans in, and the machine is doing the sorting and the collection, everything by itself. And in the end, you will get a recipe for the deposit you paid in the beginning for these all these cans and bottles and so on, and you will get it back. These machines you can find in almost any convenience store in Germany or Europe. And they come in different kind of sizes and scopes. So here we see that the woman is putting this huge bag in, but they also come in smaller sizes where you put in the individual bottles or cans. But they even come also in much larger sizes for industrial scale. The second segment of Tomra is the recycling and sorting segment. Here you can see one of these recycling lines, for example. And what Tomra does here is they provide the machines that are necessary in order to sort all this garbage out from itself. So they can sort different materials, for example, like plastic from paper and from metals. But they can also sort different kinds of plastic or even different colors of plastic, each in their own bin, so that you end up in the end with really very pure materials that you can reuse in the end. And the last but not least segment of Tomra is actually the food sorting segment. This works very similar to the recycling segment, only instead of trash, they do the same sorting stuff for different kinds of food. Here you can see green beans, but it can also be done for smaller peas or for different kinds of nuts or so. They have a huge assortment of different machines for different kinds of food, but the principle is always the same. So how do these machines work exactly? Let's have a look. So what you can see here is we have a conveyor belt with our material, and we have different kinds of sensors. On one hand, there is a high-speed camera with laser illumination. On the other side here, we have, for example, an X-ray detection. This is only an example. Different kinds of sensors can be combined and are used for different kinds of materials here. If you want to detect different colors of plastic, for example, you need to use some different color sensors, for example. So basically your material is dropped from the conveyor belt, in this case, is detected by your sensors, cameras and X-ray systems. And then you have this air nozzle on the lower end of your machine, which shoots the materials in the respective bin. So with this air nozzles, you can basically sort the material into very accurately into different kind of either bins, but it could also be a different kind of conveyor system where the material is transported to its end location, basically. The same principle is true for recycling material, but it is also used for the food. The sorting principle is always the same. These machines are not used individually. So for example, if we have a look at the municipal solid waste sorting in Cyprus, it's not only one machine that is used here. You can see it's a lot of different machines. Only for plastic sorting, it's already 4 of these Tomra machines. But then you have some paper cleaning, paper sorting, different kinds of sorting and conveyor belt systems. And all is provided by Tomra. So here you can see the market power that Tomra really has with their machines. It's not easy to replace any of them because they also work interlocked with each other. So now let's have a look at the different business segments of Tomra. Around 51% of their revenue is coming from the collection segment. This includes the retail business with the bottle collection, but also the industrial bottle collection customers. Around 20% is coming from the recycling business, and the remaining 30% is coming from the food sorting business. So what this means is that around 70%, or exactly 70%, are coming from the collection and recycling business and are very close related to waste management and plastic recycling. So Tomra's own estimation right now is that around 40% of the plastic is only collected for recycling. The remaining 86% as of today is just lost materials, just deposit on landfills, or it's even burned. And of this 14%, only 2% is closed loop recycled. That means it can be used to produce new plastic again. You can see it goes down to the production of new plastic bottles or other packing materials again. The goal of Tomra by 2013 is actually to bring this collected collection of materials up to 40%, and the closed loop recycling even up to 30%. That means a lot more and better sorting is necessary to achieve this, to get a purer material in the end without any foreign particles or different kinds of plastics that are mixed in the wrong materials here. Here we can see the current waste trend all over the world in the different markets. So from 2016 up to 2050, you can see that in all regions, the generated waste, and measured in millions of tons here, will increase significantly. When calculating the CAGR for this, it sits around 1%, a little bit higher than 1% over all these areas, and over the whole time range from 2016 up to 2050. By far the biggest market is the Asia-Pacific market, followed by North America, then comes Europe, and in the end Latin America. And what is very interesting is if you look at the number here, you can see that by far the most of these different kinds of plastics, at the moment it's still put on the landfill. A little bit is combusted, but only a small percentage is recycled in terms of each of these materials. Of course, that's a lot of waste, and not to mention the environmental impact. So it would be really great if Tomra can improve this trend over the course of the next years. And if we have a detailed look of the different interest groups, we can see that it's not only the end consumers that demand the responsible use of plastics and the recycling of plastic, but there are also legislative pushes, for example, the EU plastic strategy, that is trying to lower the combusted and the wasted plastic, so to say, and to increase the recycled amount in the end. But also we can see here different kinds of companies, for example, Coca-Cola or PepsiCo. They have organized themselves and they are pushing themselves for these kind of more use of recycled plastic and higher amount of recycling of their bottles and their cans. So the recycled plastic market, due to all these pushes from different market actors, is expected to be grown from 8.3% CAGR up until 2030. I don't expect it will stop at 2030, as we saw even Tomra themselves expect this to grow only to 40% till 2030. So there is still a lot more room to grow even after this. Also, as long as the global population growth, the more waste will be generated and the more need for recycling is definitely there. When we look at the sorting machines market, here these numbers are only for the US. But even if we look at the global sorting market, we can see that it's expected to grow with around 6% CAGR up until 2028. And what is also interesting here is that the amount of gravity sorters compared to tray sorters or weight optical sorters is going up. And this is exactly the kind of sorters that I just showed you before in the video. Actually, Tomra has machines for all of these segments, so they are not exclusively working in only one segment. And this is also something that separates themselves from their competitors. First of all, Tomra is the only company that is working in all of these segments. And they also have in all of their segments, they are the clear market leader. When we look at the recycling equipment market, it's very similar. We also have a global CAGR of 5.4% up until 2030 here. And you can also see the distribution of different kinds of materials, metals, plastic, construction waste, paper, and rubber. It's kind of equally distributed, but this doesn't matter so much for Tomra as they provide the sorting machines for all of these segments. So let's look at the competitiveness of Tomra. The threat of new entrants in this area, I would assume, is quite low because of the high capex necessary and the high also technological barrier. You saw there are a lot of high-tech sensors like high-speed cameras and X-ray sensors needed in order to operate these machines. So it's not very easy to first of all develop the know-how and then implement it in a way that Tomra did with all the ecosystem around. The threat of substitute in this case is also very low for the same reasons, I think. Tomra is not operating in a vacuum, so there are competitors, but none of their competitors has such a huge portfolio as Tomra does. And also Tomra is really pushing here for digitalization by providing different analytic methods and even APIs. So you can, for example, control your collection devices from your mobile phone and get a warning as soon as the container is full, for example, or so. So I see that they can also benefit here from data analytics and maybe even AI in the future. Because they are not alone in the market and there are a couple of competitors, I would think that the competitive rivalry is medium. Tomra has a very strong position in the market as market leader in most of their segments, but their competitors are not sleeping. The bargaining power of their customers, I would assume, is also medium because they are not directly selling to the consumers, but to grocery stores and even to bigger industrial complexes. It's not that sensitive to the price, but it is sensitive to different kinds of economic aspects. Like, for example, if the oil price decreases, then the price for virgin plastic is going down, and it's hard to compete for this recycled plastic with newly made plastic. So there are a couple of different aspects that have to be taken into account for the bargaining power of the customers. The bargaining power of their suppliers I would also think as medium, mostly because of these high-tech sensor devices and sorting mechanisms that they are using. They have different kinds of suppliers for these, but it's very special and very designated sensors and air nozzles and so on that they need. So they cannot replace, they cannot very easily replace one of these sensors with another one. So I think in this case, Tomra has a decent moat, but they don't have a monopoly here. Still a strong market position. So when we sum up the risk factors and growth prospects, we can see the first risk factor I identified is the customers have less money for investments. This is always depending on legislatives and governments, how they decide to spend their money and how they think the recycling should be pushed forward. I already mentioned the decrease in oil price, which will affect the price for newly made plastic. The setup costs of these machines, you saw the huge recycling fab, so to say, in Cyrus. So the initial costs are very high, and even the running costs are definitely there. And if the governments or companies reduce their recycling targets. This will also definitely have an impact on Tomra. On the other hand, if you look at the growth prospects, there is definitely the secular trend, first of all, to a growing amount of waste by a growth of population. But again, there is a growing demand of recycled material and recycling itself for benefit of the environment. But also, plastic is made of oil, and that's a non-renewable resource. So at some point, it will run out and we will be forced to use recycled stuff at a much higher quantity than what we do today. The regulations are driving collections and recycling segments. That means all over the world, the governments are pushing for these new recycling goals. And just in Europe, we can see in Romania and in Poland, for example, they will bring such new regulations next year or 2 years from now to the market. So there is a definitely, the consumers will be forced to recycle more. And for this, they will need Tomra machines for collection, but also for sorting of the waste in the end. And as last growth prospect, I would assume that data analytics and AI can definitely add value in the near future to Tomra's machines. As I said, they're already using these data analytics by implementing APIs and so on to their machines. They only have started with this. There's a lot of upside potential. When we have a look at the financials, at first I want to show you this slide that is mentioned in the investor presentation of Tomra. And they are set to double their business in the next 5 years. So this is the goal of Tomra. I'm not saying that this is realistic or that I think this will happen, but they definitely have very ambitious goals here. Tomra is not only growing organically, but they also have quite a nice history of successful acquisitions. In all the different segments, you can see it's Tomra Collection, Tomra Recycling, and Tomra Food. And they have acquisitions, but also divestments in some of these segments. For example, in 2014, they divested Orwak. This is basically a packing business that is not related to the core business of Tomra anymore. And in 2011, they also divested for a material handling business that is also not part of the core business anymore. I really like this trend because it seems like Tomra is really focusing on their core business. They are strengthening the core business with these new acquisitions, but they are also focusing it by divesting business that is not directly related to their core business. So let's see how Tomra did financially in the last years. First of all, let's have a look at the revenue, the net income, and the free cash flow of Tomra. And when we look at the orange line, the revenue, it's a very nice uptrend. There are some small hiccups, but overall it's a very nice, stable upwards trend without much fluctuations, though this is very nice to see. When we look at the net income, it looks a little bit different. There's a bit more up and down, but in the end it's also kind of a stable uptrend. We can see there is from 1 year ago, end of 2022, there was a slight dip, and since then it has been stable again. But if we look at the free cash flow, it looks unfortunately quite a bit different. Here we can see that we also had a kind of a stable uptrend up until 2021, but since end of 2021, it has declined significantly. And when digging deeper into the numbers, I found a couple of different reasons for this. So at first, when we look at the accounts receivables and the inventory, we can see from the same time frame, end of 2021, there is a significant increase in both of these values. Accounts receivables, especially from end of 2022, this is when it increased definitely, but we can also see that it went up a little bit already in 2021. And the inventory numbers here are a little bit worrying because here we can see that from 2021, the inventory up until today increased of about 30%. Another impact that they had, they mentioned in their last quarterly report. So we can see here they had a huge cyber attack on July 16th, which impacted their operation, but also their financial handling. So you can see they mentioned here their related costs to the cyber attack, of course. Their services and machines have remained operational, which is good news. So there was only a slight operational impact, but the cyber attack caused a huge delay in invoicing to the customers and impacting the cash flow in the quarter. When we look down here, we can see that they mention also the negative cash flow is related to the delayed invoicing, but they expect this to recover again in the next quarters. So this definitely explains the account receivables. It doesn't explain the inventory. The higher inventory is due to a much weaker food business, which they also mention. You can see here the food business compared to the third quarter in 2022, so 1 year ago, was down almost 20%. In the long run, Tomra is expecting this also to recover, but this definitely puts short-term strains on the balance sheet. I also like to look at the dividends because I like my companies to pay at least a little bit of a dividend. And here we can see it's also an uptrend over the last years. In 2022, we had a stock split 2-for-1. So please keep this in mind when looking at the dividend values. In general, it's an uptrend. In some years, it's a little bit higher. This is mostly due to some special dividends. But as Tomra is a European company and they don't pay so much care about the always increasing dividend, there might also be some years where Tomra is decreasing the dividend. And especially if we look at 2023, there was a significant decrease in dividends up to today, which actually I find quite a good news because it seems like Tomra is actually trying to balance the dividend with the cash flow. And by having negative cash flow this year, it might not make sense to pay a higher dividend. This year it's either way not covered by the cash flow, so they need to leverage the balance sheet again and they need to take on some debt in order to pay the dividend. So maybe it's better in this case to pay a smaller dividend and increase it in the next years again when the cash flow recovered. One thing that is kind of special about Tomra is the high percentage of institutional investors. You can see institutional investors make up around 60% of the overall investors in Tomra, compared to the general public, which only has around 14% of all of Tomra's shares. This brings us kind of a special risk in the case that if these institutions decide to sell out of the company, this will have a huge impact on the overall stock price of Tomra. It's not only one institution, there are several, but still, this poses definitely a risk in the future. So let's jump to my checklist now. You can see revenue growth. When we looked at the graph already, we saw that Tomra is doing quite well. So we have a year-over-year growth of 20% and a CAGR in the last 5 years of around 11%, which is definitely a green checkbox in my mark. When we look at the net income growth, it was also positive, but not as good as I would like it to be. On the year-over-year value, it was only 2.2%, and the 5-year CAGR is almost 8%. But still, this slowdown is a little bit worrying, so it receives a yellow checkbox for me. Free cash flow growth, on the other hand, we saw how the graphs looks like. The year-over-year value is insane. It's minus 4,600%. And the CAGR over 5 years is again minus 100% free cash flow growth. This is very bad, and this is definitely a red checkbox for me. I understand why this currently is the case, and I think that the growth trend of Tomra is not disrupted. This should only be a pause in the growth trend. I think when they can recover from the cyber attack, when they receive the money back from their customers, the outstanding money they have, they will turn this around again and it will be positive by next year again, I would assume. but there's still a remaining risk that they will not be able to recover this. Also, with the economic slowdown and the already increase in inventories, it still keeps to be seen if they will ever achieve or how long it will take until they achieve the free cash flow growth they had in the last couple of years again. Because of this negative growth trend and the negative free cash flow they have, the free cash flow yield, of course, is also negative. So it's a red checkbox for me again. On the other hand, the balance sheet of Tomra sits with a very low leverage of around 3.2 times liabilities, not non-current liabilities to EBITDA. It's just ever so slightly higher than I would like to have it. I would like to have it at 3 times EBITDA. So at the moment, it's a yellow checkbox for me. But the EBITDA, of course, also relates to the net income and the business of them. So it's a bit lower compared to the last years. If we compare this with the number, or especially if we compare the debt with the number, with the EBITDA number of the last years, this leverage would be much lower. So as soon as they can recover their business, the balance sheet will look quite clean again. But for the time being, this is still a yellow checkbox for me. Tomra is paying a dividend of currently 2.02%, and the 5-year CAGR from them was 6.5%, which is an okay value. It's nothing insane, but it's still nice to see. So it's a green checkbox for me. And unfortunately, also the margins, the return of invested capital and the operating margin have dropped down in 2020 and 2022 and 2023 because of the reasons I mentioned. I would also assume that they can recover in the next years, but for the time being, it's also a yellow checkbox for me. So before we jump to the summary, let's have a look at the fair value calculation. Because we just saw that the free cash flow and the free cash flow growth rate is negative in the last year, I will not do a discounted cash flow analysis because I would have to guess these numbers. And I don't feel very comfortable to assume or guess these numbers for next year or for the next years. So in this case, I'll stick to my multiples and my Gordon growth model calculation. And for my multiples calculation, I assumed a net income growth rate of around 6%, which is a little bit lower than the values we saw in the last 5 years. Same is true for the dividend growth rate. I assume a growth rate of 4% here compared to the 6.5 that we saw in the last couple of years. But we also already saw that the dividend for this year was lowered again. So I'll assume in the long run, 4% might be a bit more conservative and a bit better value to assume in this case. With these two values, I'll come to a fair value of $9.50 to $8. And when including my margin of safety of around 10%, we come to a fair value of $7.50 to $8.50, very roughly. And when we look where Tomra sits today, we see that Tomra sits at around $8.30, which is in the upper range of my fair value calculation. So we can see that there is a resistance value down here that Tomra just bounced off, and we can see that the next resistance value sits around $11 here. So let's see what happens in between. It seems to be roughly fairly valued. There is not so much downside anymore, I think, after also the steep drop that we had from July this year. We can see here, this is around the time when the cyber attack became public. And we had a huge drop up until today. If we look at the drop that Tomra had in total from their highest highs up to today, we can see that it's almost 80% drop of the total market price. So this is a huge drop. And I definitely think that Tomra is right now much fairer valued compared to half a year ago. When comparing the price to earnings and the price to cash flow multiples, this also seems to confirm that the company is more fair valued right now than in the past. If we just look at the PE, we are right now as low as we have not been in the last 5 years. And even the price to free cash flow, even though the free cash flow declined significantly, is still in the same area that we've been over the last 5 years. So to sum it up, I think that Tomra is much more affordable right now and has much better growth potential compared to the last couple of years where they have been very highly valued. I think the areas that Tomra is operating in are very good growth areas, and they also will help a more sustainable future. I do like their divisions, I do like their operating areas, and I still think that the long-term growth of Tomra is definitely there. However, because of the short-term uncertainties with the cash flow, for the time being, I will not invest my money in Tomra. But I'll definitely keep them on my watch list, and I will definitely have a look at them again in maybe half year ago or maybe 1 year or so, and see how the cash flow especially turns out until then. If you have any comments about this, if you have shared the opinion or have a different opinion, please let me know down in the comments. And if you're already down there, please hit the like and the subscribe button. Would help me out a lot. As you knew, this is a very brand new channel, so this each click goes a long way, and it doesn't cost you anything. That being said, thank you very much for watching, guys, and see you next week. Bye bye.